Hey everybody, it's Henry Steele. Today's January 29th, 2024, and this is the fourth video in the series of videos I'm doing this year about trading basics. So many times people get caught up in the excitement of trying to forecast a market really well or learning all these secret methods, forecasting price and time and all that good stuff. They get caught up in that and they forget that they don't even know the basics about trading. Well, that's what this series is for the entire year of 2024. And this is the fourth video in that series. Now, if you're looking for any of the old videos that I've made and you can't find them on this channel, it's because I've moved them to my new YouTube channel called Henry Steele Classics. To be able to get to that channel, all you have to do is put Henry Steele Classics in the YouTube search bar, usually on top of the video somewhere. That will take you to the channel. I'll also put a link down in the description to the new channel. So if there's a video I've done that you're looking for and can't find it on this channel, it's on the new channel. Now, with that in mind, let's start talking about today's subject, which is, again, support and resistance. But this time we're going to talk about support and resistance from multiple time frames. My example market today is the gold spot market, gold US dollar spot market. And we're looking at an hourly chart right now. And so here's the concept. If you'll remember, let me just use this chart. If you remember, I talked about major support and resistance and minor support and resistance on a static time frame, meaning you just stick to one time frame. So if we're looking at this chart right here, we can see that we have a major support level right here because the market moved a lot of price distance relative to the price action we see here to get to it. In other words, the market was moving down. This is actually the biggest move on the entire chart. So that makes this, on this particular static chart, this makes this major support. We then have a big move up here. There's a big move from this low up here, which means this right here is major resistance right there. This is a big move also, relatively speaking. We have these small moves up here, and then we have this larger move up, which means that we have another major resistance level right there. Now, if we look here, we find that we have a top here, a second top there, third top there, and this means that we have a resistance zone created by these three tops because we have three tops that show up at not exactly the same price level, but pretty close to the same price level. So we've got this zone of resistance here. We see the market moved down below it significantly, and then within the last few hours has moved back up into this zone, found resistance, and has come down from there since then. Now, these levels right here, like this low, this low, this low, these would be considered minor support and resistance levels because the price has moved only a small amount, relatively speaking, to get to these price levels over here. So these would be minor support and resistance. This would be a major support and resistance zone, right? Pretty simple. Now, here's the thing. You might initially think that if you, for instance, let's draw this one back in just really quickly. This zone right here, that if you're putting support or resistance on a chart, on an hourly chart, for instance, and then you move down to a lower time frame, that you would expect this kind of behavior. You would expect the market on a 5-minute chart to consider the higher time frame support or resistance to be major support and resistance. Makes sense, right? That if you come from a higher time frame, if you make a line, a support or resistance line on an hour chart, and then you move down to a 5-minute chart, that should be considered major support and resistance, especially when we consider the fact that moving back up to the hour chart here, this was considered major resistance right here. So on the hour chart, this is a major resistance zone. So on the 5-minute chart, we should consider this a major resistance zone, right? And the answer is absolutely. But there's a caveat. And that is it depends on what time frames you're moving from. Now here's what I mean about that. Let's go up to the daily time frame. Let me delete these lines right here to clean this up. Let's go up to the daily time frame right here. And before I go on with the rest of this, I want to point this pattern out right here. You see this? The market's been moving up. It makes a top right here. That's a Friday. Monday, it opens up and spikes way up here, but then that price is rejected and then it closes down lower. So you would say, well, there's an area of resistance right there, and you would be correct. But there's also an area of resistance to be considered right here. Because of the close right here, this is considered a top. The market spikes right there and rejects it. So we really have, in a pattern like this, we have two areas of resistance. We have two price levels of resistance, and because this spike is so big price-wise, it's not one big zone of resistance, it's actually two price levels that are both resistance. So since this is such a big price difference, it's not a zone of resistance, it's this price of resistance, this level of resistance, and this level of resistance. Hopefully that makes sense. So if you see a pattern like this on a top or a bottom, you get a big spike and rejection, you're able to consider it, you're able to create two support or resistance zones, or not zones, but price levels from it. Now with that in mind, on the daily chart here, we can look at this and we can see the market move down, came back up, found resistance right there, and then started moving back down, right? Easy enough to see. But if we move from the daily chart to the hourly chart, let's go to the hourly chart here. You can see that the market exceeded this for numerous hours, for about a day before it came back below it right there. So it didn't find resistance at exactly this line. I mean, later when it was coming back down, it popped right up to it, popped up to it a little bit. But the phenomenon that we see here is the market on the hourly chart technically broke through that line of resistance from the daily chart. And this is something you need to keep in mind. If you're creating a support or resistance line on a daily chart, and then you're going down to an hourly chart, 15-minute chart, 5-minute chart, something like that, you will frequently see the market break that line on that lower time frame because you're going from daily to intraday. If you use an hourly chart, which is intraday, you create a level of support or resistance on that hourly chart, then you move down to the 5-minute chart, you're still going to see a fair amount of respect for those support and resistance lines or zones. If you're making a zone from multiple tops or bottom that are very close together, you're going to see a fair amount of respect for that because that's also intraday. So what I'm saying here is there's kind of this barrier between daily and above and daily and below. So if you're creating lines of support or resistance or price areas of support or resistance on a daily chart, a weekly chart, a monthly chart, and then you're trying to use those lines to trade intraday, like on the hourly chart, the 4-hour chart, 15-minute chart, whatever it might be, you're very frequently going to see things like this, where intraday, the market breaks above it or below it if it's support, and then eventually comes down below it. Now on the daily chart, like we saw before, observe this line of resistance right here. I mean, it was obvious. It just moves down, moves up, stops here, closes there, and we move down the next day. So it respected that line. So the point of saying that is if you're looking at a larger time frame that's intraday and go to a smaller time frame that's intraday, you'll find that there's a fair amount of respect for the support and resistance. And you can consider, like, for instance, resistance on an hourly chart to be major resistance on a 5-minute chart. But if you've drawn resistance, and this is major resistance on this daily chart, you're not going to just come right up to it on a 5-minute chart, stop and move down. I mean, that can happen, but the most frequent thing that you're going to see is something like this, where you move past it and then a day or so later you move away from it. So that's the big thing to keep in mind. When you're using support and resistance on a static time frame, I talked about how to determine whether it's major support or resistance in the previous video and a little bit in the beginning of this video. If you're using support and resistance from a higher time frame, it depends on what time frame that is, because there's this line, for whatever reason, between the daily and intraday, daily and above, I should say, and intraday, where it doesn't obey it. It doesn't obey it exactly on the intraday when you've drawn the lines from daily and above. So that's something that you have to keep in mind. And the thing is, if you find that on the daily chart you're getting a resistance level like right here and you move down, you can expect the move down to be significant on the 5-minute chart or on the hourly chart once that move down starts. But you want to confirm it on the daily chart, or if you've drawn it from a weekly chart or a monthly chart, you want to confirm it there before you move down. Now, if you draw something, let's do this. I was going to say, if you draw something on the monthly chart, so there's the monthly chart right here, and clearly we have a zone of resistance that's developing right here. If the market moves down and comes back up, we would expect to get resistance in that zone, but this is the monthly chart, so this is... Let's draw this in right here. This is March, the month of March 2022, and then the market comes back up to it in May of 23. So let's go down to the weekly chart. And we see in May of 23, we got this on the weekly chart. It still obeys it quite nicely, but obviously a week is a long time, a month is a long time. So on the monthly chart, it definitely obeyed this level of resistance. On the weekly chart, it obeyed, in quotes, this level of resistance. This is, let's see, beginning of May 23. So now let's go to the daily chart. Go of May of 23. We see on the daily chart, when the market came up to this monthly resistance up here, popped right above it, came right back down, and was indicating that the market, was reacting to this level. So this is the daily time frame right here. The market on a monthly time frame is obeying that level, that support and or resistance level, all the way down to the daily. In the next video, which is going to come out hopefully later this week, I'm going to look at a live market, and we're going to look at higher time frames intraday, higher time frame support and resistance, and see how the market reacts to them on a lower time frame. Like, we'll probably draw something on an hourly chart and then see how the market may react to it on the 5-minute chart or the 1-minute chart.